Wowzers, holy smokes, Tesla has surged more than 30% in less than 1 week ever since Tesla has announced that they're splitting the share from 1 to 5, which is crazy. So, what does this mean? So, guys, if you own shares in Tesla or thinking of buying Tesla shares before the stock split, or wanting to know if you should even buy it after the stock split, you got to watch this video today. For the stock price right now with this explosive growth, I want to share my thoughts on the company and why I made an investment in Tesla. And I want to share my thoughts on the valuation and why I think it's going to be the next trillion-dollar company. You want me to make more of these videos for you and more Tesla videos? Please smash that like button, hit it, so that I can make more of these videos for you. So let's get back with the video. Before I jump into the valuation, I want to go through what is the competitive edge in Tesla. And of course, most importantly, talk about the risks with Tesla before I go through the bit of the valuation on the stock price. The reason why I made an investment in Tesla is because of its great competitive edge. It's got a massive brand. It's a leader in battery storage. It's got agreements with utility companies to store their energy in their Tesla batteries. Of course, they build electric vehicles, which is so much further ahead than any other car manufacturer. So that's a big obvious one. Other pieces that they're also supplying insurance for their own cars. So they're an insurance company. They're also so much further ahead with their self-driving software. There's no other competitor out there that's even coming close to the amount of information that they have and their software that they're producing. Got Gigafactory in China, and that's pretty important because China is going to be one of their biggest buyers of Tesla, and they don't need to pay import fees unlike other competitors, car manufacturer competitors. Of course, we've got Tesla battery. We also have their solar tiles, which is nothing in comparison with their solar panels on roofs. If you were a Tesla owner and you did buy the solar tiles, you could charge up your own car using the energy from your solar tiles, using the Tesla battery, and then charging your own car, which is like amazing. Tesla has a very cool integration. They're so different from other car manufacturers, where car manufacturers has to rely on a bunch of suppliers to provide them parts and third-party suppliers. While Tesla builds their own battery, they build their own chip, they have their own software, they have their own insurance, they also have their own powertrain, and they have their own factory. So there's so much that they control, are so much more efficient with their production because of the seamless integration with all those pieces stacking it on top of each other. Last, of course, Elon Musk is running multiple companies, one of which is SpaceX. And like a lot of the stuff that he's using, say, learning from SpaceX could be applied to Tesla, like the Cybertruck, with the bulletproof window. The material that they use in the Cybertruck is from SpaceX, what he's got from SpaceX. So there's going to be a lot of cool ideas that he's taking from other companies and being able to apply it to Tesla. So what are the risks? Elon Musk is the face of Tesla. Elon Musk is the visionary. Like, think of Apple. When Steve Jobs was the face of Apple, what happened after Steve Jobs left? Well, I would say that the innovation kind of ended for Apple. I mean, it's great managed. It's a greatly well managed cash cow company, but I would say that innovation is kind of lost in Apple. And so the same thing could happen with Tesla, with Elon Musk, say, leaving the company or anything that happens to him. The second thing is people can always steal from Tesla. I mean, especially with Tesla building the Gigafactory in China and China being a huge market share in electric vehicles, they can easily steal the technology, build something that's very similar to Tesla. So Elon Musk, everyone knows, Mars is his #1 priority. And if everything goes to craps, like all his other companies go to craps, and he had to only focus on one company, it would probably be for sure SpaceX. So I guess that is a risk in itself. But do I think these risks are that real? I mean, I mean, weighing the risks versus rewards, I see a lot more upside than the risks. Let's talk about the valuation. Now, you could see, I'm going to show you fair value just from Simply Wall Street, which is the platform that I use and I love. I have a paid version of it. You know, fair value, it's like they say it's overvalued. I mean, I totally have to agree. If you look at Yahoo Finance, look at all the what the analysts are saying. Also, they're saying overvalued.
So thanks, Tracy. Thanks for telling me that it's overvalued, but how did you get to the point where it's a $1 trillion company? Hmm.
So let's dive into that right now. Okay, so I ran a quick calculation just based on what Elon Musk had said. He said that expects Tesla to grow 40 to 50% year over year. Now, I don't know if that means just cars, but I was just thinking, okay, it is building a ton of gigafactories, building one in Austin, it's got one in Berlin, it's got one in Shanghai, and of course, it's got one in California. Those are all going to produce like about 500,000 cars per year per gigafactory. And of course, there's going to be many, many more gigafactories that are going to be built. Now, let's just assume Elon Musk is right that his company is going to grow 40 to 50% year over year. Let's just say he only grows in cars. So let's strip out the insurance revenue model. Let's strip out the software as a revenue model. Strip out the robo taxis as a revenue model. Just focus on just production of cars. And he grew 40 to 50% year over year. That would mean that by 2030, it could definitely exceed more than 20 million cars per year. Let's just say Elon Musk is like out to lunch, and let's strip that and decrease that by 50%. So let's just assume that he is able to only produce 10 million cars a year by 2030. That would be the equivalent of, like, say, Toyota, who can produce 10 million cars a year. Just assume that it can take up a huge market share to succeed in overtaking the internal combustion engine, and that each car sells around $40,000 per car. So if you run those numbers and just use a revenue multiple of, say, 4x, that's how I got to the $1 trillion market cap.
Tracy, that model is way too simple. That's like, boo, there's no way, boo, because first of all, you can't get 4x on a car manufacturing company. There's no revenue multiple in any car company that's 4x revenue.
And you're right. But if you look at tech companies, then that gets really, really interesting because tech companies like Apple, like Microsoft, like Amazon, they have multiple of, from 2 to 5 to 6x revenue multiples. So can become a tech company because is able to charge software at $8,000 per car for its self-driving feature. If it achieves its self-driving feature, it can actually become the next Uber for cars, which is like saying it basically is another company like Uber. And then the other piece then and actually getting back to the Uber model, it has a huge profit margin. Like they're thinking like 30,000, they can get $30,000 a year on each car as revenue, which is like crazy. Just think of what China, with all the cars that they have on the street, just replaced by robo taxis. I'm not even talked about battery storage. I haven't even talked about how much they can sell on their batteries. So that's what I'm saying. It could definitely be the next $1 trillion company by 2030 because of all the revenue streams that it has.
Thanks, but like, how about other tech companies? How long did it take for other tech companies to go to the next $1 billion market cap?
So let's actually look at that. For Apple, it took Apple, Amazon, and Microsoft took less than a decade to reach $1 trillion. So with Microsoft, it started with Satya Nadella taking leadership of that company, and it went from a market cap of 300 billion surging to 1 trillion during his time there. Apple had their trigger. What was their trigger for getting to their next trillion? Was the iPhone. That was their big revenue model that just completely exploded their growth. Amazon was fast delivery, and that's really what triggered Amazon to become just $100 billion company to the next 1 trillion in less than a decade. While Tesla has so many other things, not only the car, the battery, the energy storage. So it has multiple reasons why it could trigger right now from a $300 billion company to a $1 trillion company. Now, of course, this is a lot of, let's say, speculation, belief in Elon Musk and his execution and his promises. So that's why I would say that if you own shares in Tesla right now, I wouldn't recommend, like personally, I'm not planning to be buying more until I could see Elon Musk proving that he can execute his master plan and it's on the Tesla company. If I do see big pullbacks in Tesla, which I'm positive, 100% positive it's going to happen because with Tesla, the stock has been so volatile. If it can surge 30% in a week, it could definitely also drop quite a bit in a week as well. So I'm expecting some big drops whenever it misses earnings or it misses expectations, or the even something as simple as battery day, which is coming up in September. And people are having really high expectations going in, and then when they leave that event, they're like, the battery is not going to do what it's supposed to do, or the self-driving feature is not even so far from what Elon Musk is saying, then the stock can drop. And that's where I'm going to see more opportunity. If I had no shares of Tesla right now and seeing how fast the stock price has surged, if I were going to make a position, I would say to myself, please, please hold it for 10 years because there's so much future growth already priced in with the stock right now. It's surged, for example, 30% in less than a week. It's gone from like, I think around $200 to now $1,900. That's like insane. And of course, I'm not your financial advisor. I am just sharing my thoughts. I'm just some person on YouTube who talks about stock investing. So please take this video for entertainment purposes, and please make your own judgment call. I know that I ran a really quick, like easy peasy model on Tesla, but really I've actually been spending over the past 2 weeks really running through Kathy Wood's ARK Invest valuation model. Basically, it's on GitHub. I've downloaded and I am investigating her valuation model, which includes Monte Carlo simulation. So I'm going to be producing more videos where I dive deep into her revenue projections and what I would tweak in that model and what I would consider future stock predictions for Tesla. Anyways, if you're interested in watching more of these videos, please hit that like button. Let me know. And also, if you have been watching my videos and you're not a subscriber yet, then please hit the subscribe button and the bell notification button so you get the latest and greatest videos coming to you. And of course, if you're new to this channel, also do the same. So thanks, guys. I'll see you in the next video.